I'm the CEO of HexTrust. At HexTrust, we'll talk about it later, but we're basically a financial institution providing infrastructure to other companies that want to adopt digital assets for their clients or for themselves. So we basically help institutions rather than retail. So my kind of angle in this is going to be about how we solve institutional problems rather than retail problems. A couple of things that maybe to highlight. Stablecoins are actually the first or the second use case that actually brought the blockchain technology under the spotlight. We've been hearing about blockchain technology for many years, but we struggle to understand actually how people use blockchain for anything. And I'm pretty sure if I ask the audience today, most of you would say that actually you don't use blockchain for anything, right? But stablecoins together with Bitcoin as an investable asset actually the two use cases that actually brought the blockchain under the spotlight and the attention of the broader global audience. So stablecoins are actually something that could change the way we do things in the traditional financial system, whether you would notice it or not. Sometimes it will be under the hood, and you wouldn't know whether you are using stablecoins when you do a cross-border transfer, when you do a payment. But it's going to be something that will power necessarily the underlying financial system as we know it today. So let's start a little bit with the basic problem that we have today, right? You do a cross-border payment. You're transferring money from your HSBC account to Thailand, or maybe since we're here at the French consulate, you're moving money from your Hong Kong dollar account to your French account, and you have a few problems here, right? So the first problem is that it's going to take a very long time, right? The second problem that is even bigger is that you don't know how long it will take. Sometimes it takes 1 day, sometimes it takes 2 days, sometimes a week. And the third problem is that you don't even know if it's going to happen or not. Sometimes it's going to be rejected and you will get it back. So there's no finality with it. On top of that, you have lots of costs in the middle, right? Sometimes you have these kind of correspondent banks in the middle. You have FX charges. People estimate that they're around 2 or 3% sometimes. And there's a lot of complications in terms of how you fill in all these forms to process these payments. I'm pretty sure all of us experience this type of issue. Why this issue exists? This issue exists because the way the financial system has been designed around 50 years ago, right? It started with a bank. The bank built their own kind of ledger and system. You probably know that every single bank, even in Hong Kong, has a different standard to categorize accounts, right? HSBC has a certain kind of account number. Citibank has a different account number. The new fintech neobanks, they have a different account number, right? And this is even worse when you get out of one bank, out of one country, right? So in different countries, you have completely different standards. When you fill in the form, this is my account in Citibank. So apart from the destination, which you don't even know what it is, then you have the bank name, the order bank, the routing number, the account number, the payee address, some other information. And these things change by every single bank. And then you have some kind of, so for example, if you're transferring money from Europe, right, they will ask you for the IBAN code, which is something that exists in Europe but doesn't exist anywhere else. Or if you're in the US, they will ask you for these strange names such as ABA, routing number, etc. that you might have seen. And we don't even know, we don't understand what they are, right? So every single country has built a different system, and these systems are not connected. It's very easy to understand because when we use PayMe and when we use FPS, actually they have solved this issue, right? They have solved this issue at the bank level. So PayMe only works for HSBC. So HSBC has standardized the way we transfer money between accounts. And FPS has standardized the way we transfer money within certain banks in Hong Kong, right? But the problem has not been solved at the global level, where every single country and every single continent or blocks operates in a substantially different way. So what do stablecoins introduce? They introduce one standardization. So every single transfer happens with one single address. You have a blockchain address, which might be complicated in today's world. It has to be simplified, but it's a number of 20-something digits. And this number is the same whether you are residing in Alaska, Australia, India, etc. And all the infrastructure underneath doesn't change. The transfer will take the same time if you're transferring from India to the US or whether you're transferring within one country. So we basically have a broken system that has been built a very long time ago on legacy infrastructure, and this infrastructure has not been updated. The only thing that we have done is that we have built some type of software on top of a very legacy infrastructure, right? Now, let me give you another example. I think the cross-border payments is still something that we can kind of solve with the traditional infrastructure, and FPS has kind of at least solved it for Hong Kong, and the IBAN, the SEPA system in Europe has solved it for Europe. But think about something else. Have you ever tried to transfer if you have an investment, for example, HSBC stocks in your Citibank account, try to transfer it to your BNP account in France. It's basically impossible. Most of the banks would not even have a process for that, right? Some other banks, a little bit more advanced, more institutional, that will have probably 50 pages type of forms that you need to fill in, and it will take months to process a transfer of securities or fund shares that you have to another bank account. Why is that? It's not very hard. It's just that the banks are not connected and they don't have the standardization that stablecoins and blockchain bring with it. So let's look at what this kind of standardization means. So stablecoins, actually nothing extremely special, right? The special thing about stablecoin is that it's kind of money that has been built on the blockchain. So what is the blockchain that actually brings the advantages to a new asset class rather than the stablecoin itself? So why we like blockchain? We like blockchain for a number of reasons. The first one that I mentioned before is that it's standardized. So the blockchain is global and standardized. Wherever you use the blockchain, you're using the same piece of software, which is not the case for banks. It's not the case for securities accounts. It's not the case for anything else in the world that follow usually local rules. So it's standard, it's global, it's 24/7. So if you want to make a transfer during the weekend, you don't need to wait for the bank to open. You don't need to comply with public holidays. You don't need to comply with kind of cutoff times of the banking system. And then, as Evan was mentioning, it's programmable and open source. What does it mean? It means that it's not just an entry in the ledger, but it's actually a piece of code that can actually follow some rules. Evan was making the example of giving money to your son at the university to be spendable only on certain things. But it's the same thing for governments. If the government wants to subsidize investments in ESG or sustainability of your house, they can distribute vouchers directly via stablecoins and program into that piece of money. They can only be spent on certain things that the government is interested to invest in. Right? In today's world, otherwise, banks or governments, they need to send you a special voucher in a paper format, etc., and then they need to notify the merchants that it needs to be accepted only in certain cases. In this case, we have a piece of software. We can do whatever we want. Imagine a notary transaction where we accept to exchange money only in case certain conditions are verified. Well, you can do this directly with a piece of software built in the stablecoin. So it's kind of a revolution how we imagine money. It's not just a piece of an entry in a digital ledger, but it's actually something programmable that can be crafted to the use case that we want to have. And then we have the finality. The finality is important because in today's world, until you receive the money in the bank account and until it's credited to your bank account, you're not sure you actually received the money. It could take 2, 3, 4 days, but this has a lot of cost for the global economy. Western Union, right? When the domestic helpers transfer the money to the Philippines, the family in the Philippines, they want to be able to withdraw the money right away. But it takes 3 to 4 days for the money to get to the Philippines, which means that Western Union has to fund the Nostro Vostro account in the Philippines and in Hong Kong. This kind of pre-funding of transactions in today has basically $27 trillion sitting on Nostro and Vostro accounts in the global banks, right? $27 trillion for 3-4 days every time there is a transaction is a huge cost for the economy. And this cost is only due to the fact that the technology is 50 years old. Now, a little bit of marketing, but I'll be very brief. So Hex Trust is the company that we founded back in 2018. What we do, we basically provide infrastructure services for companies operating in the digital asset space. We provide services to digital asset organizations, in this case, for example, stablecoin issuers. We provide services to institutional investors that want to buy these digital assets, and we provide services to service providers. It could be banks, it could be insurance companies, neobanks, payment companies, etc. Right? As of today, we process around 350 million of stablecoin conversions from and into fiat money every month. And we provide a number of services for them. We provide wallets to basically integrate stablecoins into the business model. We provide yield. So when you hold a stablecoin, you can actually earn the interest rate, which you don't usually earn with fiat money. And we provide all the other services that allow you to basically move money in and out from the blockchain. Not sure what time it is, but I think I will just leave you with a couple of numbers, right? So this is not something that has not happened yet. It's actually happening. I'll leave you with a couple of numbers. If you look at the top left, in the last 12 months, we have $10 trillion of transactions, adjusted transactions. So from here, we're eliminating anything that has to do with trading bots or kind of inter-exchange transactions. So these are real transactions, $10 trillion in the last 12 months. Now, Visa is processing how much? How much do you think Visa is processing every year? More, less, 10 times more, 10 times less than this?
Comparable.
It's actually comparable. So Visa in the last 12 months processed $12 trillion. But another question is, how long did it take for Visa to get there? So it took 50, 60 years for Visa to get to these levels. For stablecoins, it took 5-6 years, right? So that's where you really see that there's a real product market fit. It's something that works very well and is scaling extremely fast. You can see in the last 5 years kind of the progress of adoption of stablecoins for transactions. 54% of the transactions are basically retail transactions, so it's not purely institutional trading or speculation on exchanges for digital asset trading, but it's actually something that is used by retail for real use cases. And it's 2 billion transactions in the last 12 months. Also, it means that every month that there are about 200 to 300 million number of transactions per month. This is huge, and it's only going to grow as we're seeing. I mean, I didn't put the numbers, but basically these are our trading volumes in stablecoins in Hex Trust. So it's not just the market is growing, also service providers, they're receiving increasing amount of business to process the transactions for the other companies that are adopting this technology. Now, I'll leave you with one last comment, is that this is, as I was mentioning at the beginning, it's just the second use case for the blockchain. The first was Bitcoin as an investable asset. This is really a use case to revolutionize the financial system, but it's just the first step. Because you don't need money to move money from one side to the other side of the world just because you want to move money. Usually you want to purchase goods. Usually you want to settle financial transactions. The issue is that in today's blockchain world, we don't have the other side of the trade on chain yet. We don't have funds, we don't have properties, we don't have other goods that can be settled on chain. So we are really at the first 1 to 5% of the adoption. By the time we have all the other assets on chain, this kind of technology will replace the way we do things substantially, and we will forget about having to fill in all those forms in the bank, and everything will be brought to this technology. Thank you so much.